Welcome to TradeTheMBI.com. This is John. This report is for the 5th of January. Well, we stayed above the ABM green right here, popped up a little bit, but that rise of the DOC steel wasn't able to convert midterm buyers in the green or red to turn around at all yet, and still strong performance from DOC science, so shorts increasing, as well as we got the crossover of MBI white over magenta. So all that's pretty consistent with the continued move lower. And again, I've been expecting us to get some move at least to fill this positive extreme. And then, of course, I've already marked the lower one that began the initial breakout move. And so even when these happened, we talked about that, we would get the move and we would eventually come back to these spots. And it's normal and healthy within that. I don't mark the lines here on the NASDAQ as much, but it doesn't take much to just click them on your setup right there. You can see exactly where it needs to go. And you can clearly see the NASDAQ definitely weaker from a broader standpoint because below the 76%, we haven't even got close to that from an S&P standpoint. So identical from a DOC reading as well as MBI. In fact, the MBI readings had already been weaker from earlier. So you can see the complete red of dip below the red line. So NASDAQ much softer, and that's going to put a drag on the S&P anyway. And so even if NASDAQ doesn't move too much, it's still going to pull the S&P down towards it there. Treasuries that had their freak out moment, ridiculous move to reduced yield, gave that up here at the open, which for technical analysis people is about to fill that gap, which would be necessary from a healthy standpoint, and not to mention the fact that rates should go up anyway just to justify where we're actually at, not versus where they think things will be if the Fed does what it does. And a lot of this is dependent too, if a decent jobs number comes in, that's going to throw a monkey wrench into all of these expectations of massive rate cuts and stuff. But if it's weak enough and there's some kind of problem in the economy, then we'll get a pretty good idea. And that would justify the idea of rate drop, but that would also put pressure on forward-looking earnings. So, this is that battle back and forth. But again, continuing to watch oil because that becomes the most significant one. Move back over the 75, I think, starts to put more downside pressure on the market to really correct backward. Not happened yet, but again, geopolitical concerns have not been abated at this particular stage, so that remains the unknown, and whether or not that accelerates things. And if you get a sudden spike in oil, then all bets are off. It'd be pretty hard to not see inflation climb from there. And will the Fed continue to push for softening within an inflationary environment, which sort of led them to where we got that caused them to raise the rates in the first place? So that would be a doom loop. But it's also a doom loop with where the deficits are and how much ongoing debt is being pulled. So something's got to give. From a euro standpoint, still way elevated, but in a comfortable range for them. So they're not, no panic there, but literally just filled back. Positive extremes. We had a couple of them starting right there was one of the first ones, and then the initial move just a little bit lower, but still at a very elevated place given where the Eurozone is at this particular stage. Gold producing nothing, and this becomes that question of, inflationary pressures and or move out of crypto spaces and that. But again, it's interesting because even with this level, you still have governments buying up record amounts of gold. Which is an interesting one because, again, this is where China and some of them have decided to move towards something more stable than they think the U.S. greenback is, given the devaluation that's been going on. Bitcoin popping back up from where it was before. No real shock there. There's been no real serious activity here from an MBI white. There's just a consolidation. We're just caught in a little range. Of course, everyone still has their excitement for the ETF setup, but we already know what my feeling is, that that's not necessarily this huge draw towards buying, because all the big people expecting an ETF now have already gotten in and set up their positions. So this would just be new retail buyers now, which would be enough to push things potentially closer to its highs. From an ETH standpoint, similar setup from that configuration. Short setup still leading it, but short-term buyers had been fully reset. Now the interesting thing is when you get that DOC steel going back up above cyan or whatever, then you're in a position where if you don't have a turnaround from um, the DOC green and or red, that becomes more problematic. So keep an eye on that one. But overall, all clean. So this gets into a more interesting one. We were talking about this setup right here, where we have the dip below the negative 13 and going back to the last positive. Last time that took place was right over here, and it called for like an 80-point move, of which we got 40 points before things turned around and then created another setup here. But that original 80-point move would be another 40 points below where this low is, which getting pretty close to it at this particular stage, which would actually fill that one. So it's interesting how that works out. But you can see we've hit the positive extreme from the 47.21 on a 50K, and that just leaves another one down here at the 4,700 range. But pretty darn clean. I mean, that pink bar really spot on. And current 5-minute chart right here shows where we're at from a modest decline. If we go back towards the intraday, we started off with a little bit of peak, and then it was just selling for pretty much the rest of the session throughout there. It was pretty modest and soft overall, but the ranges intraday are still good, even if the final print seems relatively flat. We're still getting a lot of movement, and then some of that transition expected with the new year. Of course, now new fund money, and that's going to be coming in for the beginning of next week, and then where that gets allocated will be the interesting one. With falling rates, the market certainly becomes more attractive. It's really going to depend on some of the economic signals that are starting to come through. So we'll stay focused on it, but for now, everything looks good from a reading standpoint. We'll just stick with it. Trade well. If anything relevant happens, I'll put on the Skype chat.